So first of all, let's start with the definition of the problem. What you're trying to do is to figure out the coefficient SSR for a particular expiration. That when underlier moves, what SSR you need to use to adjust your volatility curve or calculate your adjusted deltas. Suppose you do a historical regression and you take a very short-term returns, say 1 minute returns, 2 minutes returns, 5 minute returns. What you're going to measure is mostly how the prevailing market makers react to the underlying updates. So you're going to measure a mechanical, some average of mechanical updates in the trading systems of prevailing market makers. People who use our system or a similar system to adjust their volatility curve, they have some settings. And in the short horizons, the market is going to react to some weighted average of those market makers, and that's what you're going to measure when you do like a very short-term regression. If you do a regression of close-to-close returns, then we're not already talking about the mechanical adjustments. So at those time scales, option flows are going to reflect people's opinion about the change in realized volatility, in the future realized volatility, and in the risk premium. Those opinions formed by slower players such as hedge funds, and in principle, those numbers don't have to be in agreement. But then there is another point: is that when you measure realized SSR, you are driving with the rear view mirror by looking at the rear view mirror, right? Consider this analogy. Suppose you want to predict the movement of a stock such as IBM with respect to index move. So you want to calculate beta of IBM with respect to SPX. You can calibrate it on historical data. You can use 1 minute return or a daily returns. You can calculate that beta, but the observed beta on any given day is going to depend on the day. If there's a market crash, then all the stocks are going to be highly correlated. It's like all betas are going to be very close to 1. If it's an earnings announcement for the stock, then the movement of the stock is going to be pretty much unrelated to the movement of the underlying. It's going to be 100%, close to 100% idiosyncratic. For this reason, what you really want to do, you don't want to. It's very easy to measure what SSR has been over the last day, over the last year, but what one should concern about is forecast SSR into the future. Right? Of course, the recent measurement of the historical regression is obviously a good starting point for this, and for most practical purposes, this is good enough. What do I mean by good enough? I mean it's a material improvement on Black and Scholes delta. So Black and Scholes delta is going to give you several things wrong. It's going to give you incorrect delta in the tails because it assumes sticky strike, whereas the shape in some normalized units like normalized strike is usually preserved, and you're going to miss that effect. And that the money vol is not preserved by sticky strike. That would correspond to, it's very close to using SSR of equal to 1, but observed SSR is almost always larger than 1. So you're going to get the money deltas wrong as well in the region around the money. If you don't use correct spot vol dynamics and you just use Black and Scholes. Yeah, so for this reason, there's a short answer and there's a long answer. So the short answer, you can take yesterday's intraday returns, say 1 minute returns, and take that term structure and use it for today's trading. You can take several months of daily returns and use that number and update it at a much slower period. You just can hard code it and do one calibration and use it for a long time, and it will work better than Black and Scholes deltas. If you really want to be fancy, then you need to build a forecasting model. And of course, in Vola Dynamics library, you get spot vol dynamics built throughout the system, so you get consistent scenarios, Greeks, and also using information from prior fits to stabilize the future fits. And this is all part of the infrastructure that's what makes it very useful and reliable.